So you multiply that by 260. This one you multiply by 200,000. You can have it separately, but this one is their variable cost. And then apart from that, they have got 392 million. That is on the fixed overhead. JK, a little bit of correction. Beta are making 200. So that is the production. So this is the production of the production. So they're having a production of 260. So that is why you multiply by 260. So take that into account. Okay. So don't multiply by 200, multiply by 250. So these are the ones who are making, the Optima, on the other hand, they are only making 2,500. So how much is that? So that is 65 million. What about if you multiply labor with that? That is 419,06,700. So how about this one? 279, 3,800. So you get this total. So before you even add, before you add, I want us also remember that this one, so from external token, Optima are buying external token that are valued at 40,000 and they are buying them at 1,600. I'm hoping you can see that particular point. We have been told that Optima Limited, they can buy from the external market token at 1,600. And remember, they can only be supplied with 160. So that gives that they are supposed to ensure that they are going to outsource 40,000. This 40,000, they are going to buy each at 1,600. So take that also into account. So now you can get this total, also you get that total. So how much are we getting as our total? This total and also that particular total. So the total of beta I'm being given, that is 14. 14,984. 4,500. Are you sure that is okay? This is 150. This is 149. So this is even less than this. They have not included this 150. Then it's supposed to be 150. So 284. Yeah, it's not 15, it's 150, yeah. Can even confirm from that particular question, you have been given the fixed cost per annum is 150 million. So this is going to give you 284. So what about that one? So if you multiply this, how much do you get on that? So then probably give us 500. That's 500 million. And then this one is 64. So how much will be that total? So that is 956. So 956 million. Of course, now maybe from this point now, maybe you can make them in thousands. I think now even if you start to round them off, maybe that one might be easier. Okay, so now we prepare the income statement. So we have the income statement. So whereby we have beta, and then we have optima. There is the external sales. External sales, maybe if you can compute it here. External sales of beta, they're selling 100,000 units. And they are selling them at 15. So that's going to be 1,500 times 100,000. I think that's going to give you how much? 1,500 times 15,000. Is it 1,500 million? That will be 150 million. So of course, this one is 150 million. So we can have the figures in thousand, shillings in thousand. So this is going to be 150,000. What about Optima? Optima, on the other hand, they are selling how many units? They are selling 200,000 units. at 6,500. The market price per gas cylinder of Optima is 6,500. I'm hoping you can see where we are getting that particular information, 6,500, and they're selling those number of units. They're going to have how much? So that's going to give you 1,300 million. So that is 1,300 million. So our figures are in thousand. So then on top of that, we bring in the transfer sales. Transfer sales, remember Beta transfers 160,000 units at 900 shillings. They are transferring only 160,000 units at 900 shillings. So how much will that give you? So that is going to be 144. So of course we get the total. This is 294. So then we bring the cost. On the cost, we have got on cost. On cost, so here we are having 284,845. I've decided to round this up, or maybe I can just have it as 844.5. On the other hand, you're having 956. Then there is a transfer cost. Remember, transfer cost is going to be that 144,000. So you can compute your profit. I think maybe a lot of issues was in the workings, you trying to compute the cost. But one of the issues, the problem first of all was for you to try to compute the labor cost. And you have to know that the labor cost was having hours, and the hours were subject to a learning curve phenomenon. If they are subject to a learning curve phenomenon, we needed to ensure that we have taken that into account. We take the effect of the learning curve phenomenon into our account, our question, and that is what we did the first thing to help us to see the number of hours that we are having. Of course, from that, we were able to get the number of hours we multiplied by 150, which is the rate per hour. So we've gotten that. Remember, the overheads also are being charged per hour. So maybe you might be asking yourself, why are we multiplying the overhead cost? The overhead cost you have been given is 100 shillings, but it's 100 shillings per hour. So that's why, first of all, we have tried to compute the total number of hours that we have, and which is the same as these hours, and we are using that to get the total overhead cost, variable overhead cost. Of course, the fixed overhead we have been given, so that is giving us 284,844.5 million. No, 284, that amount. And then on the Optima side, remember, first of all, Optima are going to have to make their own cylinder before they add the token into it. Remember, you're talking about a cylinder and then you add the token to it before you sell it to the public. So they're making their cylinders first as 2,500. Of course, how many cylinders are they selling? They're selling 200,000 cylinders. Remember, you have been told that they have a capacity of making 300,000 cylinders, but we are only working with 200,000. Remember, that is because we will only make the cylinders that we're going to sell. There is no reason for us to make excess cylinders that we cannot sell. So that is why we are only making 200,000 cylinders. We are not making 300,000 cylinders. We have a 300,000 capacity, but we have been told that the sales is only for 200,000. I'm hoping that is correct, or that is okay. Then, of course, we have got the fixed overhead. Of course, we have been given that is 392 million. On the other side, if there is going to be excess, there was going to be a shortage of supply of cylinders that we are going to be given. Remember, Beta is going to supply the cylinders to Optima. However, they also have got the external sales. They can only produce 200,000 cylinders. No, they're not producing 200. They're producing 260,000 cylinders on tokens. Of the 260,000 tokens, they are going to sell 100,000 to the public. So if say they sell 100,000 to the public, then it means that they can only supply Optima with 160. So that is why Optima will be taking 160 from them. Then you are going to be forced to outsource, buy from the external market 40,000 tokens. So that is why we are having these external tokens at market price of 1,600. So 40,000 you multiply by that 1,600. Of course, that was our total cost. So we bring everything here. So now we can compute what is our profit for each department. You have to know that the transfer sales is also the transfer cost. So please take that into account so that you try to avoid that confusion. Transfer sales is for the selling department. It is a sales to the selling department, but it is a cost to the receiving department. So how much is our profit? Victor, in beta, how much is your profit? What are you getting as your profit? That is 91.55, 500. 91.55.5. On this other side, I think this one is going to be 200,000. Okay, yeah, you have rounded it up, I think, yeah, so that is mostly. On the other side, this is 200,000. I'm hoping that is correct. We are getting the same value. The question is, they have asked you that is Optima achieving their target profit? What is the target profit of Optima? JK, what is the target profit of Optima? That is in note number 4. Optima has a target profit of how much? 180 million. How much are they making? They are making 200 million. So it means that they are able to achieve it. So remember, the examiner has also asked you to indicate whether Optima division will be able to achieve their target profit. So in this particular scenario, they are able to achieve that target profit. So any question on that, maybe before we proceed? Recap from wonder about what you have done on this particular question or not, or what? Okay. Maybe I think one of the issues will be in. Okay, maybe you'll allow me to try to fix some figures here. So we have to note that when you look at the question, you have been told that we are having, there is the beta division, and then there is the Optima. Beta are selling to Optima. That is the first point which you are supposed to be able to understand. Whenever you are dealing with transfer pricing, you have to know who is transferring to who. So Beta is selling to Optima. And then we have been given also the production capacity. That was in note number 5. In note number 5, we have been given the production capacity. So the capacity of Beta is 260,000 tokens. We are talking about the tokens that you add them to the token meter. So they are making 260,000 tokens. However, they have got an external sale of 100,000. So if they have 100,000 external sales, so then it means that they will only have to transfer 160. I'm hoping that maybe from that point we can be able to understand one another. We are together. So they are making 260,000, but they have external market for 100,000, so they will only transfer 160. On the other hand, Optima has got an external market for the sale. They have got 200,000 units. They have an external demand of 200,000 units. So that is what they're supposed to sell, to supply to the market. However, they are going to only be given 160. So then it means that they will have to buy externally. So maybe that is from that's what I'm calling to outsource. So they are going to be transferred with 160. So they will have to, this one they are going to outsource. So they will have to outsource 40,000. Since they have to, every cylinder that is going to be sold by Optima must have this token meter. Of course, I think when you look at the time, when you look at the labor time, labor hours, the labor hours, they were using the learning curve. And remember we said that total time is usually equals to AX into 1 plus B. And of course, I think that one, A was 20, X was 260,000 units. Then it was 1 minus 0.2345, if I'm not wrong. 1 minus 23.45. So that is to get our time, and it gives us the total labor hours, which was 279,387. That was the total labor hours. However, we have to know that labor is being charged at 150. That is Beta. So we are working with Beta, assuming that we don't have Optima. First of all, just work with Beta. So Beta, they're using material for 250 per token meter, and they're making 260. So that is how we get the 65. The labor, we multiply this by 150, we got that. Overhead, we look at the question, overhead is based on the labor hours, and they're charging 100 shillings per labor hour. So that is giving us this. Fixed overhead of Beta you have been given, so that is how we got this total value. On the other hand, when you go to Optima, remember, they are going to buy, to first of all make this particular gas. They are making a gas cylinder for 250 shillings for a single gas cylinder, and they are making 200,000. Since that is their demand, they will sell 200,000. They have got a fixed overhead of 392. That one is there in the equation. However, we have said that Optima also have to buy. They are outsourcing these 40,000 tokens. These 40,000 tokens that they cannot be able to be supplied by Beta, they are being forced to supply or to buy them. If they are going to buy them, that is 40 times 1,600. That is giving us 64 million. Of course, it gives us this total, and we are having that total. So this is our own cost for each department. What is going to be the own cost of each department in terms of these particular two items? That is for Beta, and that is for Optima. When you look at sales of Beta are having two sales, which is, first of all, to the external market, they are selling 1,500 and they're selling 100,000. That is how we got this 150 million, which we are using here. Then they transfer the rest. They are only transferring how much? To Optima. They are transferring to Optima 160,000 token, at 900. I think you have seen also, it is there in the question, the transfer price also you have been given 900. So that is giving us 144. Of course, that gives you 294. On the other side, Optima is selling 200,000 and they are selling to the at 6,500. That's how we're getting 1,300. Of course, their cost, there is the own cost. The own cost, I think that is what we are computing here, so that we don't have a scenario whereby it is going to maybe bulk our work when we try to compute it here. We have decided to compute the own cost aside and then just bring it at the total costs. However, there is also transfer cost. Transfer cost is the same, 144 that they are buying them from, the better cost giving us those profits. I'm hoping that is okay. Okay, so I want us to try another question here. This is November 2019, question number 2B. November 2019, question number 2B. You're welcome. November 2019, question number 2B. November 2019, question number 2B. He's talking about AZX. AZX. November 2019, question number 2B. I'm hoping that we are there. So the question is on AZL Limited. AZL Limited, a manufacturing company, is planning to launch a new product. The new product model, which life cycle is 3 years. The following estimated data has been provided. We have got research and development, the year 1 and year 2. Production cost, variable cost per unit, and total fixed cost, marketing costs, variable cost per unit, and then total fixed cost, distribution cost. There is also fixed, I think that is fixed, because there's a disposal of special equipment that is at the end. Then present value factor, you have been given that. 1, 0.89, 0.80, 0.71. The production in units. So next, the marketing manager, director believes that the customer could only pay 120 units, shillings per unit, but the finance director believes that this will not cover all the projected costs throughout the life cycle of the project. It is supposed to be November 2019. If it is not that November 2019, maybe try to. Or what about your May 2018 question number 4? May 2018 question number 4B. Is May 2018 question number 4B on that? Is it May 2018? The question on AZK Limited. It is on a life cycle question, life cycle costing. Yeah, AZK, yeah, that question. So Victor, which question is it? Which paper is it? Yeah, November 2018 question 4B. November 2018 question 4B. I think my paper might have been jumbled up a bit. November 2018 question 4B. Okay, thank you. November 2018 question number 4B. I'm hoping that we are there. Okay, so what we're going to do, first of all, I remember whenever you're dealing with life cycle costing, we agree that life cycle cost is equals to, you take the total cost, you divide by the number of units. Total cost we divide by the number of units. So first of all, what we're going to do is we have to try to compute the total cost. However, there is a twist there, since the examiner has introduced the time value of money. So given that the examiner has introduced the time value of money, we also have to ensure that we take that into account, the present value factor. So we're having, can have it, that is year 0. Then there is year 1. Then you have got year 2. Then we have year 3. So on year 0, we are having research and development, whereby you are spending 850, 400. Then we have production cost. On the production cost, there is a variable cost. On the production cost, there is a variable cost. You have to note that you have been given the cost per unit. And down there, you have been given the number of units. So it means that you are supposed to ensure that you multiply to get the total variable cost. You have to multiply them to get the total variable cost, whereby you have been given 100. In year one, there is 100, and you are producing 20,000. So 100 times 20,000, I think that is going to be, is it 2 million? 100 times 20,000. Is that giving us 2 million? That is 2 million. Then year two, it is 80 times 20,000. That is going to be 1.6. And then we have got 90 times 20,000. That is 1.8. I'm hoping that we are together on that. You have those figures. Plus also we have got the fixed. On the fixed, we are spending 500 each. That is on production. Then you have marketing. On marketing, there is the variable cost. Variable cost on marketing, this is 12. You multiply by 20. How much do you get on that? That will be 240,000. 8 times 80, that's 160,000. 10 times 20, that is 200,000. On marketing also, we have got the fixed, whereby you have 200,000. You have 150,000. Then you have 100,000. Then, of course, there is the distribution cost. Distribution cost, this is mostly fixed. I think there is no variable. It is fixed. 120,000 all through. Then there is the disposal. That is going to occur on the final year, which is 300,000. So let us get the total cost every year. Let us get those total costs for each and every year. So the first thing that you are going to, remember we said that the life cycle cost is the total cost you divide by the number of units, and that is what we are trying to do. So if in a year, remember the variable cost, you have been given the variable cost, we are multiplying the variable cost to get the total variable cost. So that is 60,000. 2530. So that is 20,000. So given that the examiner has given us the time value of money, so then it means that we are supposed to discount these particular values. He has given us the time value of money and he has given us the discounting factors. We are going to use that to discount. So of course we're having, there is the year, then we have the cash flow. Then of course we can have the present value. Okay. The year, the cash flow, there is that discounting factor. Then you have your present value. So in year 0, you're having 850, 400. So that one you multiply by 1, it will stick to 850, 400. In year 1, we are having 30, 60,000, 0.89. In year 2, having 25, 30,000, 0.80. In year 3, we are having 30, 20,000, 0.71. So let us discount those figures. Mm-hmm. 27, 23, 400. Okay, just ask you a question. Twenty 24. $21, 44, 200. So what is their total cost? Oh, I'm sorry, I think. Oh yeah, there is the one in year 1. Sorry about that. I think there's supposed to be another 200,000 here. So maybe it will only change that. I didn't see that research and development. There was an oversight on my part. That is 29,01,400. So we can get the total. $79,36,000. And look at the number of units. It is 20,000 each year. So those are for 3 years. There is 60,000. We're going to take 79,36,000. You divide by 60,000. How much do you get? $132.27. Getting 7920, the total, 7920. So if it is 7920, if you divide, how much is your cost? $132. So if you compare, so this is the life cycle cost. 132. And if you see that maybe the target cost is more of 120. So we're having a cost gap here of 12 shillings per unit. We would expect that, or according to the question, we have been told that the marketing director believes that the customer could only pay 120 per unit, but the finance director believes that this will not be able to cover all the life cycle costs. So you can see that the life cycle cost is so much, and possibly it is a point whereby it cannot be able to be recovered. And so since it's going to be 120 cost, 120, 132, however, they can only pay 120. So we are having a cost gap. Maybe now, if you are the individual, what are the ways that you can try to use to try to reduce these particular costs? I think maybe the way you can try to do that is maybe try to look at the development and research. You can try to either increase the money on the development or research, or you try to do more research to see what you can be able to add to the product, or you can be able to reduce the product that might make it cheap to produce. I think that is the first item that you can try. And then, of course, you try to look at maybe among these variable costs, maybe we have got some cost, like the production cost, the fixed cost, the marketing cost, the distribution cost. Can you be able to reduce them, or are they going to be staying constant? You can also try to look at those costs that can be able to be reduced. Maybe possibly the fixed cost, the distribution cost. What can you be able to do on the distribution purposes? We can even try to have a scenario whereby we change the method of distribution that we are going to be able to apply as a way of trying to reduce that particular cost. Of course, also marketing. What can we be able to do on the marketing? Will we reduce the marketing to some extent or not? Of course, we will believe that if you try to change, based on the research and development that you can do, it might be able to reduce the production cost. We can only reduce the production cost by further research and development. I think we talked about whereby you can even decide to redesign that particular product. So I'm hoping that we are okay on that particular point. Is there any question maybe before we introduce another area? So I can have maybe I think around 5 minutes breather. Then we try to look at performance evaluation. So this is supposed to be, is it topic 5? Performance evaluation and measurement. Around only 5 minutes, and then we try to continue on that. So this is our topic 5, performance measurement and evaluation. Every organization at the end of the day, they have to ensure that they can be able to measure the performance or be able to evaluate whether their performance are they are occurring at the best optimal perspective or not. So first of all, you can look at maybe those factors to consider when setting performance measure. The notes I think I did share today, they're in the group. I did share them during the day. Possibly you can go through them so we can be able to look at them together. So factors to consider. When setting a performance measure. You all know that at the end of the day, every organizations, however much after you have performed, at the end of the day, there is need for people to come and measure. Sometimes as a business, we may have got targets. So there is also need for us as a business to see whether did we actually got to achieve those targets or not. And why is it that we did not get to achieve them? What are the things that we need to do to have that? One of them is the resource requirement. Resource requirement. When you talk about the resource requirement, you need to understand that a department that is getting a lot of resources, we would expect more from it. I think they're saying that to whom much is given, much is expected, than a department which is maybe having maybe a slightly less resources. Case in point, if you have got department A and you have invested there 1 million, and then it's giving you a profit, assuming this is the profit of 50,000. And then department B, you invested there 200,000 and it's giving you a profit of 30,000. To some extent, that performance might be misleading. However, as we are going to see, yeah, you can see that maybe department A is performing better than department B. Department B, you have only invested 200,000, it's giving you 30,000. If you try to compare that based on this, you might find there is a little bit of difference. But that is what we are trying to understand. So first of all, try to look at how much am I investing in that particular department. Apart from that, you look at the objective. Why are we having this particular department, or why are we setting this particular performance measure? I think when we are talking about pricing, we also talked about sometimes ways that we can be using to price. Sometimes we might even find ourselves that since we want to introduce a new product into the market, we might decide to lower the prices. So of course, that one also can also affect our performance. Maybe we have said, okay, let us just make a loss, or maybe not make a loss, but maybe just a little bit of profit. Then the following year, we will increase it. So of course, sometimes that can be the issue. Apart from that, we also look at the relevance. Relevance of the performance measure. Why am I having this performance measure? And of course, sometimes nowadays we are a fan of social media. And when you go to social media, you will find a lot of bloggers. And bloggers just bring in every figure there. So the question is, why do you have that? If you're a football fan, you see the statistics. Nowadays, when you look at a midfielder, we talk about GA, how many goals have he scored? How many, what we call is them take-ons, dribbles, of course, why do we have got that? Are they relevant enough or not? Remember, sometimes also you don't need to have a single performance measure. Maybe if you talk about maybe by goals, who is the best player? But apart from goals, who is a playmaker? Apart from this, what about this? So we need also to have got a various set of performance measure. So that is why we talk about the relevance. Apart from the relevance, then Let's talk about the expected short-term goal. What are our short-term goals? Why are we making this? What is the short-term goal? Sometimes the short-term goal might be profitability. But apart from the short-term goal, also you have to look at what? The long-term goal, short-term and long-term. So what happens if we make profit this year? What about next year? What do we want next year? And I think mostly if you look at politics, you have also seen that problem with the politicians. If you have been elected this year, you also need to know that there is going to be a next election. So that is why you have to perform better so that there is a re-election. Or did you just want to be elected once and for all? We have got those. Also, you can talk about the fairness of the measure. Fairness of the measure. Is this measure that we are putting in place, is it fair or not? Remember, if I invest here $1 million and I'm investing here 200 million, at the end of the day, would I be expecting that this one should give me, if this is giving me 50K, this one also should be giving me 50K? Sometimes it might be unfair to B. Since B, we only invested 200,000 compared to those other people whereby we invested $1 million. So that is also need to be taken into account. So that's why we talk about the fairness. Of course, also we have got the variety of measure. So we have agreed that if you are going to do a performance measure, we cannot only have a single performance measure. And that is why we need to have got more than one. Sometimes this person might be progressing on item A, but on a particular area, you can see that he's very weak. So are we going to just accept him for where he's strong at and not look at where his weaknesses are? The same thing, so that's why we need to try to look at maybe a candidate or maybe a department that is performing on all fronts also. Maybe we can also talk about the realistic. The performance measure that we said should also be realistic. Maybe I can also say, look at a company like Safaricom. Safaricom, of course, it's a good company, but you cannot measure performance of Airtel and you try to look at it with Safaricom. Sometimes to some extent it might be, yeah, we know they are in the same industry, but Safaricom seems to be way above the rest in terms of maybe the telecommunication industry. So if you try to compare them, sometimes it might not be unreal. It might be unrealistic also. Okay, so there is some terms that I want us to try to define. And since these are some of the terms that we might find them as we continue. There is what we call responsibility accounting. Responsibility accounting. So when you talk about responsibility accounting, in this particular, the organization will be divided into departments. And these departments are what we're calling responsibility centers. And the head of that department will be responsible for the performance of that department. So if the department is okay, he is the one who is going to bear that. If the performance is bad, he is also going to be the one who is going to enjoy the consequences. That is what we call responsibility accounting. We are dividing an organization into departments, and then the head of those departments becomes responsible for the performance of that particular department. So when you talk about a responsibility center, so a responsibility center, that is simply the department which is being controlled by the manager, whose manager is responsible. So that is what you're saying, that this is just department or a unit of the organization. That is a responsibility center. Apart from that, we have got what we call a cost center. A cost center. Cost center, on the other hand, this is also a department that incurs costs. Any department that incurs cost or that can be attributed to cost, we say that that is a cost center. It incurs cost. Apart from that, we have got a profit center. A profit center, this is a department which can be assigned both revenue and cost. It can be assigned both revenue and cost. Of course, the question is, how do you compute your profit? Remember, we usually say that profit is equals to revenue minus cost. So that is why a profit center is a center that is being assigned the revenue and cost. You can also have a revenue center. A revenue center, this is a center that is only assigned revenue alone. When you talk about revenue, you're talking about the sales alone. So that is a profit center. So there's a center that is assigned revenue alone. Then we have got an investment center. Investment center. An investment center, this is a center, or this is a department or a division whose performance is measured based on the capital employed. Performance is measured based on capital employed. Of course, it's just a responsibility center, but performance is going to be measured based on the capital employed or the capital assigned to it. So we have got about the methods of performance measure. So the methods we have got financial, and also we have non-financial. There is a financial measure, and then we have got the non-financial measure. So today we are going to introduce the financial measure. Financial performance measure. The financial performance measure. So when you talk about financial performance measure, this one tends to concentrate on the financial aspects of the organization. They concentrate on the financial aspect of the organization. So in this particular point, we will discuss three. One of them is return on investment, ROI. Number two, we have got residual income, RI. And then number three, we have got EVA, economic value added. So those three are the ones that we are going to discuss when you're dealing with the performance measure. The financial performance measure. So we are going to start with the return on investment, ROI. Return on investment, which you call the ROI, return on investment, if you call ROI. So this is I said that this is a measure that expresses the divisional profit or the division of profit as a percentage of capital employed. It is a method that expresses the division of profit as a percentage of capital employed, as a percentage of capital employed. So how do you measure ROI? So ROI is equals to, just have the divisional profit, or you can have the profit divided by capital employed. Of course, you multiply by 100. The profit over capital employed, you multiply by 100. So when you talk about the profit, remember these are centers, centers or a division. So we are talking about the profit in that particular perspective. Please take into account that capital employed is also going to be referred to as the net asset. Will also be referred to as the net asset. So what are some of the advantages of us maybe using this? You can find that it will permit comparison of the performance of two different departments. It will allow us to compare the performance of Department A and Department B. So that is one of the advantages of having these. Apart from that, aggregation of ROI is very convenient. So we can be able to find it, and it's also very convenient. Then also, as a disadvantage, what you can say as a disadvantage is that when you're using ROI, it needs to be able to consider that different departments or different investments have got different risk perspectives, which it tends not to take into consideration. We have to note that maybe a person selling coffee do not go through the same reality that a person selling, let's say, is it what? Irish potato goes through. Person selling sugarcane might not be going through the same hardship as a person selling milk. So we cannot measure them and compare them using the same measure. So that is sometimes ROI do not take that into account. Of course, also it might also give that misleading perspective. Of course, we will look at that misleading perspective. You have to know that net asset of an organization tends to go down if you do what? Whenever the organization compute depreciation of these assets, we expect that the net asset should be going down. And with that, you might find the organization might be having that assumption that the profit is going up. However, it is the net asset that is going down. However, on the other side, ROI can be telling us, oh, you can see that it is improving. So that one can be misleading. Of course, also we can also say that you cannot add ROI. If Department A is having ROI of 10%, Department B is having ROI of 15%, you cannot add them together to get 30% as ROI. So sometimes it's also very difficult on that. Another problem maybe that we might have is what we call suboptimization. Suboptimization decision making. But I think maybe we'll see it when you look at our example. You can maybe find yourself making suboptimal decisions. In terms of, remember, given that you're measuring this organization performance based on departments, every departmental manager wants to show that he is the best. And what would happen if he's doing that? He might find himself trying to leave some projects since the project might reduce his ROI, since he wants to ensure that he's the best. But that one might be problematic to the organization. Of course, sometimes also it might also find the organization might find issues with what we call the goal congruence. I think we talked about goal congruence, that as an organization, you're supposed to have the same goal. But if we decide to compete among one another, how will it affect us having the same goal? And then we have got the residual income, residual income. RI, residual income, RI. So these two tends to go together as twins. So when we talk about residual income, this is the amount left to the farm, after providers of capital have been paid. Amount left to the firm after providers of capital have been paid. Amount left to the firm after providers of capital have been paid. So this is how we compute RI. RI is equals to the division profit minus cost of capital minus the cost of capital. Or sometimes people might refer to this as imputed profit. Minus cost of capital or imputed profit. To some extent, one of the advantages of this particular method is that we don't find ourselves maybe in sub-optimization. As long as a project is having a positive feedback in terms of RI, that project is going to be accepted, which is as opposed to this particular one. Apart from that, also you can talk about there is flexibility in decision making as opposed to ROI. However, it will also fall into the same question whereby you might find scenarios whereby there is a sub-optimization in decision making. And also we can find ourselves in scenarios whereby the organization might have that false effect of improving performance. The false effect of improving performance, which is not actually true. So I want us to do an example. There's an illustration in that particular paper. No, the notes. That is in page number 4. There is that illustration. So whereby we have been given the divisions. So the question says that a company defines ROI as operating income divided by total asset, where RI as operating income less the imputed interest charged. So we have got the following divisions. The newspaper, you have been given the income, you have been given the revenue, and then you have been given the total asset. So there is the newspaper. So this is 1100. This is 4600. And then this is 4.9. That is newspaper. Then you have got the TV, 160,000, 6.4, 3 million. Of course, you have got the film, which is 200,000, 1,650,000, 2.6. So that is the performance of the information. So there is a division of the newspaper, 1.1 million income. The revenue is 4.6. The total asset is 4.9. Television is 160,000, 6.4, 3 million. Film, 200,000, 1,650, 2.6. The manager of the newspaper division is considering a proposal to invest 200,000 in a fast-speed printing press with a color option. The estimated investment will have an operating income of 30,000. The company has a 12% required rate of return for investment in all the 3 divisions required. Use the DuPont method to explain the difference among the 3 divisions. Next, advise the manager of the newspaper division whether he should undertake the investment proposal using ROI. Next, compute the residual income of each division before the proposed investment, and would adopting RI basis change the manager's decision on the acceptance of the proposed investment. So first of all, we are going to try to compute ROI. So ROI, this is how you compute ROI. you have agreed is the division of profit over, you can just have it as net asset times 100, or you can also compute. When you talk about the DuPont method, you say that ROI is equals to the division of profit over ROI is equals to the divisional profit over revenue times revenue over net asset, you multiply by 100. Of course, mostly this one will go with that. So that is why it will still remain that. However, when you talk about the DuPont method, we tend to, you can just have your answer on that particular format. So we first of all are going to compute it before department, I think is the newspaper people decided to see whether they are going to accept that particular project or not. So this is what, so news, we are having 1100 over 4900 times So I'm using this particular method over 4600, which is the revenue, times 4600 over 4900 times 100. So that is on the news. What about on the TV? On TV, you're having 160 over 6400 times 6400 over 3000 times 100. And of course, you have got the film. That is 200 over 1650 times 1650 over 2600. Of course, that you multiply by 100. So what is going to be our ROI for each department? So remember, we have said that ROI, it is the divisional profit over net asset times 100, or divisional profit over revenue, which is, this is our revenue, times revenue over net asset, you multiply by 100. Both of the two methods will give you the same answer. So please do not be finding yourself stressed, oh, which one are you supposed to use? You can use any, nobody is going to penalize you. So how much are we getting? So that is 22.545%. So that is 5.3%. 7.69%. So that is how we are going to have the performance. So what about the print? Maybe if they have got the color print machine. So if they have the print machine, what is going to be the ROI? So the ROI will be, remember, if they invest in the print machine, they are going to invest 200,000 and have 30,000 as profit. So they are going to have, remember, ROI is equals to divisional profit over the divisional profit over net asset times 100. So they're investing, they're getting 30,000 over 200,000 times 100%. So how much will that give you? So it is giving us 15%. However, the question is, do you think that the newspaper division will take that particular project? So what will happen is that, what happens if the newspaper division take the project? The ROI of the newspaper division now will be, the ROI of the newspaper division will be, remember they are having 1100, so that is 1100 plus 30 over, they are investing 4900, so that is 4900 plus 200. So you multiply that by 100. How much will it give you? You have to note that this is the profit of the newspaper division. If they do that particular project, if they include the print machine, they are going to have to increase the profit by 30. The investment, they have only investment 900, and also we are going to have to increase because they are going to buy that particular asset at 200. So that is why we are having those two. So with that, how much is going to be our profit, our ROI? So you can see that is 22.15. So do you think that this particular news department, will they invest in that particular project or not? Will they invest in it or not? They will not. And that is one of the problems that we are saying. What this particular person is going to say, that you can say that if they don't take that particular investment, their return is 22.45. However, if they take that particular investment, their return now is going to reduce to 22.15. It has reduced. So given that they will analyze it from that perspective, they will find themselves doing what? Rejecting that particular project. And that is why we have said that sometimes we might find it. Remember, this particular print machine is giving us 15%. It is even more than what these particular two departments are having. So it means that we should even take it. But because this particular department manager wants to ensure that his ROI continues to go up, he will find himself rejecting that particular project. And that is one of the problems that we face in that. Now let us compute RI. So RI is equals to the divisional profit minus imputed profit. Now, how do you compute imputed profit? So this is net asset you multiply by required return, or maybe the rate of return. Net asset you multiply by the rate of return. So that is how you get your imputed profit. Now, imputed interest, or what we're calling the cost of capital on asset. So, news, we will have 1100 minus 4900 times 12%. TV, we have 160 minus 3000 times 12%. I'm hoping that you have seen where we are getting the 12%. We have been given the required rate of return is 12%. Of course, then you have the film, which is 200 minus 2600 times 12%. So how much do we get on that? So this is 512. So this one is negative. Are you sure this one is positive? This one also is negative. And you can see that they're giving us the same answer. Technically, they're giving us the same answer. In terms of when you look at TV, its return is only 5.3%, which is less than the required return of 12%. And that is why you can see that they are giving us negative. In terms of, there is a negative in terms of the residue income. So possibly, if you are to advise, these particular two departments might not continue to do their project. Or negative 200, thank you. So these two departments might not continue to do whatever they're doing since they're having a negative income. Oh, sorry, supposed to be 3,000. I think I'm sorry on that. This one is 3,000. That all answer is 3,000. And then what about when you do now the print? The print, you are having 30 minus 200 times 12%. Of course, that is going to give you, I think it's going to give you 6. Is it 6? $30, that is the profit of the print if they take the profit. So minus that. So you can see that in this particular context, you will take it. Since it is giving us a positive what? RI. Any project, any department that has got a positive RI will be undertaken. If it has a negative RI, it should be stopped. So if you use this particular decision, then you will tell them to continue. If you use the other one, then you will not continue. Of course, if you decide to look at it for the whole the news, now we are having 1100 plus 30, so that is going to be 1030 minus 400 plus 4100 plus that minus 5100 times 12%. How much does it give you? No, it is 1130. Sorry, 1130. They were having 1100 plus 30. So now it is 1130. Then they are having 4,900 as assets, but you are investing another 200 in terms of assets. So that is why you're having 5,100. So how much do you get as that? To give you 518. So that is why if you use RI, you will see that since it's giving us a positive RI, it is increasing our RI. It is not the same as what was happening on ROI. So maybe December 23, question number 4B. Maybe yeah, we'll see. Question number 4C. So attempt that, December 23, question 4C. Just go and attempt that. I think we will start from there tomorrow. So this is a very short topic. But first of all, please let us try to understand how do we compute these particular items. Of course, the formulas might be simple, but now maybe based on how the examiner is going to have its question, maybe you might find ourselves having issues. So we need to avoid that. So let us stop there, and we will continue from there tomorrow. So have a good night, and also thank you for your time. Thank you.
So I want us to pick the first question, that is August 2022. August 2022, that is question on VAT, August 2022. That should be question 4B. Question 4B. August 2022, question 4B. We kick start on that. Question 4B. So if you're there, we respond to the yes. If we are there, then we give it a yes. If you're there, then we give it a yes. So say August 2022, question 4B. So we have it as August. So that is on VAT. VAT, August 2022, question 4B. Question 4B. Question 4B. Are you on it? If you're on it, you give me a yes. If you are on it, you give me a yes. You respond with a yes if you're together. Perfect. So we read from the Zawadi as a sheet. Zawadi as a sheet. Zawadi as a sheet. Zawadi as a sheet provides consultancy services to various clients whose terms of contracts allow clients to pay for the services either before or after provision. So terms of contract basically allows the client to pay either to pay for services before or to say or after provision of service. So then we read through the following information. The following information is provided regarding the firm's transactions for the month of October, November, December, November, October, November, and December 2021. So then we have the nature of service. We have what we call the nature of service. So number one is audit services to Excel Supermarket, valued at a figure of 700,000. That was basically the service provision was on 25th October. Then the payment date is November 2021. The payment date is basically November 2021. Are we there? We respond with the yes if you're there. November 2021. Give it a yes if you're together. If we are together. So what is the tax point based on information that we're given? What is the tax point based on the information we have? So based on the information that we have, what is the tax point? What is the tax point based on that information, number one? So the tax point is basically October. So then we have training services to Kyle Security. The value the value of the service is basically 240. The value of service is 240. Then say not yet paid. The value of services, the service was November 2021, and the payment date not yet paid. So what is the tax point? The tax point. The tax point is November. Perfect. So then we have consultancy. We have what's called consultancy services. And you told what total children's home. So the figure is 600,000. We have December. The service provision is basically 5th December. We have it as 5th December 2021. Then the payment date is basically November 2021. So what is the tax point based on that information? But what is the tax point based on that information? So the tax point is basically November. So we're told what total children's home. That's not a charity unless we're told that's a charitable organization. Then you have what you call debt collection service to Zuela, debt collection services to Zuela computers, to Zuela computers. So the figure is 820,000. So we have the service provision date, that is 9th November 2021. Then you have the payment date as 30th November 2021. Then you have the payment date as 30th November 2021. As 30th November 2021. So what is the tax point? The tax point is, for that, what is the tax point? The tax point is November. So then we have strategic plan development, that is Basel in Rwanda. Number one, strategic plan. We have Basel in Rwanda. Mention of Rwanda. How do we call that service? Is it a standard rate service? Is it a zero rated? Is it an exempt? To Basel in Rwanda. Services that are provided, that should be zero rated because that is outside the country. So the figure is basically, the figure is 2,150,000. So we say that service provision is basically 10th November, then not yet paid. So what is the tax point in relation to that? The center, what is the tax point in relation to that? So the tax point is, based on that information, the tax point is, what is the tax point? The tax point is November again. So look up, look up. So the management consultancy, we have Shylock's investment. We have what's called the Shylock investment. So for the Shylock investment, the value of the service is basically 1,440,000. Then the service provision date is basically 13th November 2021. Then we're being told there's an information. There is an information here. The service date is basically, there's an information. So we have an information 40% paid, 40% paid on 13th November 2021. So it basically means 60%. 60%. It basically means that 60% was not paid altogether. But in terms of, it basically means that 40% was the one that is paid, and 60% is yet to be paid. Yet to be paid. Is that true, Tabs? Tabs, is that true? 60% is yet to be paid. I hope that is okay. So in relation to VAT, are we going to charge the VAT on the whole figure, or we are going to charge VAT on the 40% that is basically paid? Are we going to charge VAT on 40%, or we are going to charge VAT on the whole amount? So we're basically going to charge VAT on the whole amount. We are going to charge VAT, and we say on the whole amount. So then you have the next, we're being told that internal control reviewed. So we have what's called the internal control reviewed. That is Lemma Limited. So the figure is the value of the service is basically 960. The value of the service is 960. The value of the service is basically 960. 960. So being told that service provision is basically 18th November 2021. However, if you look at the payment date, the examiner tells us that 10% paid on 7th of October 2021. That 10% was basically paid on 7th October 2021. So 7th October 2021. So what is the tax point in relation to that information that is given? What is the tax point? Is it October? Is it November for that particular entry on internal Zipporah? So Zipporah, what is the tax point? The tax point is basically October, because the earlier is the down payment was basically done on 10th. That is 10% on 10th of October. Perfect. Then we have the last information. We have the last information. So on the last information, we are being told that financial consultancy. We are being told that financial consultancy to W Limited. The total value of the service that is on the financial consultancy, the figure is 1.2 million. The figure is basically 1.2 million. So you have the service provision date as 20th November 2021. However, the payment date is 1st December 2021. So what is the tax point in relation to that financial consultancy to W Limited? Perfect. So look up additional information. So additional information. So on the first additional information, so being told that Shylock investment, so we're being told that Shylock's investment was declared bankrupt, was basically declared bankrupt on 30th November 2021. How do we deal with the bankruptcy? Was basically declared bankrupt on 30th November, on 30th November 2021. On 30th November 2021. How would you deal with the bankruptcy? That bankruptcy. We are going to claim a bad debt relief on that. We're together. We are definitely going to claim a bad debt relief on it. Are we together? So the bad debt relief is basically going to come on what amount is going to be a bad debt relief? The percentage that we are going to claim bad debt relief is a figure of, is it the whole amount? 60%. Thank you so much. So then we are being told that on 5th November 2021, the world has issued renewed and national training licenses for 30,000 and paid for legal fees. The figure is 360 to follow up clients who are not paying as per the agreed date. So the national training, the national industrial training license of 30,000 and paid a legal fee. How do we treat them? How do we basically treat them? How do we treat them? So which one is input? Which one is not input? Which one is input? Which one is not input? Which one is input? Which one is not input? So legal fee is basically input. Legal fee is what is an input. So look up additional information number 3. So on the additional information number 3, electricity bill paid on 10th November 2021 was 270. Are we together? Electricity bill that was basically paid on 10th November, we say 10th November 2021 was 270. Are we together? Was 270. Are we on each team? We are being told was 270. Give me a yes. Perfect. So out of which, look up team, out of which 100,000 was payment for outstanding bill on October 2021. So 100,000 was basically for outstanding bill for 2020 October. So that 100,000, are we going to claim VAT on 100,000? The figure of 100,000, are we basically going to claim VAT? No, why? Because the tax point was basically October. So we are in agreement that the tax point was basically in October. So the tax point was basically in October. The tax point was basically in October. So we respond with a yes if we're together. The tax point was basically in October. Are we together? So the next information, so 20,000 in shillings, 20,000 was in respect to additional deposit, was in respect to what they call, was in respect of additional deposit as demanded by company power. Additional deposit as demanded by company power. Are we going to claim VAT for the deposit? Remember, that's not an advance payment by the deposit. Are we going to claim VAT on it? Are we going to claim? No, we are not going to claim for the deposit. If it was an advance payment, then we would have. So look at fuel consumed for partners' vehicles. Fuel consumed for partners' vehicle amounted to 90,000 during the month of November amounted to what they call 90,000 during the month of November 2021. How are we going to treat that fuel? So being told that the examiner is very clear and says that fuel for what they call for partners' vehicles amounted to 90,000 during the month of November. How are you going to treat for the partner? Is that a business expense or a private expense? Yes. Is it a business expense or a private expense? That's a private expense altogether. Yes, based on 20. So we don't claim VAT on the private expense. Together, team, we don't claim VAT on that private expense. So then we proceed to the next. We're being told that Zawadi, before that, we are being told computer purchase for business. Use cost of this computer purchase for business, use cost up to 40 in November. So for the computer purchase, what are computer purchased? Computer purchase for the computer purchase. That is an input VAT. That is on purchases and expenses. Then the second last, Zawadi Associate paid rent for the month of November, amounting to 180. Paid rent for the month of November, amounting to 180. That is on 5th November 2021. On 5th November 2021. How are we going to treat that? On 5th November 2021. So what is that? So that's also an input VAT. Then lastly, a very powerful information. So this information basically says, the last information, transactions have been stated. The examiner says that transactions have basically been stated inclusive of VAT at the rate of 16%. At the rate of 16%, where applicable, unless otherwise stated. What does that statement basically mean? You tell me what that statement basically means. That statement. What does that statement basically mean? As I forward something to somebody. What does that statement basically mean? A minute as I. What does that statement mean? What do you say? Have been stated inclusive of VAT. So what does that basically mean? If you say they have been stated inclusive of VAT, So what does it basically mean? Inclusive of VAT. So what are we using? Sorry, maybe I was not looking at what you're saying. Just repeat again. That is 16 over 116. Perfect. Is everything understood before we go to the required? Is everything understood? Is everything understood? Perfect. So is everything understood? Perfect. Perfect. So then we go to the required. Compute what we call the VAT payable into bracket or refundable to Zawadi Associate for the month of November. To Zawadi Associate in the month of November. We can open a T account because there's no exempt in this. We can open a T account or we can do them separately. So I think we can just work it out separately. So which one do you want us to start with? Should you start with input or output VAT? We start with the output VAT. Is that okay? Output VAT. So we start with the output VAT. So we have item. We have items to what we call supply. Supply amount. We have the VAT rate. We have the VAT rate, and then we have the VAT. And then we have the VAT. Are we able to see that? If they are able to see that, you give one yes. So the first item is audit services. We have audit services. Are we going to include audit services? We're saying for the month of November. So my question is audit services to Excel Supermarket. Is it falling in November? No, it's not falling because provision was October. That is the tax point, so it's not falling. What about training? Training of services to Kylie services. So just note it, Kylie services, training, just T, training by Kylie services. So that the tax point is November. So the tax point for that is November. So we have it as 240, 16 over 116. Give me that. 16 over 116. Give me that. 16. And you say over 16. So you're the guys to support me on that. 16 over 116. Support me on that, team. You're the only guys I have, so there's none that have. So that should be 33, 103. So we have it as 33, 103. 33, 103. So what about accountancy services to Watoto? Is it falling? Is it falling on? Is it falling on November? Which one comes first? The payment. So that is falling on that. So accountancy to Watoto, Watoto Children's Home. I know some people say that this is exam. No. When they say children's home, that is not specifically mean that is a charity. So that should be 600, 16 over 116. Get for me that. You're the guys giving me that. Give me that. Somebody has already gotten it. What is the figure? So you have it as 82, 579. So 82, 759. Is it 759? 579. 582, 579. So we have 82, 579. So then we have the next, we have debt collection services to dweller. Is the tax point November? Debt collection to dweller. Somebody says 759. You're the ones giving me that figure, unless you tell me which is which. Somebody, I'm being told I am wrong, but I'm wrong because you're giving me that. Is it 759 or 5? 759. Thank you. I think that is confirmed. What about debt collection service to dweller? Is the tax point November? Debt collection to what? To call to dweller. See, the tax point is perfect. That is 820. 16 over 116. So what are we having? 16 over 116. What are we having? So that should be 113, 103. 113, 103, 113, 103. So we can move to strategic development. Strategic development. So you have it Basel. And the word Rwanda makes it what? The word Rwanda makes it. A mention of the word Rwanda makes it. Switch off the video, Joy. Switch off the video. So the word Rwanda makes it zero rated. So it makes it zero rated. So the figure is 21. We have it 50. 0. If you multiply that by 0, that should be 0. So then we have the next. We have management consultancy. Management consultancy. So we have the management consultancy. That is Shylock. That should be the whole amount. So that should be 16 over 116. So what should that be? 16 over 116. So we have it as 198,621. 198,621. 198,621. So we have it as 198,621. Is that correct? Is that figure correct? So perfect. So then we have the next. We have it as financial consultancy. We have it as financial consultancy, W Limited. So the financial consultancy to W, that is 1.2. So 16 over 116. What are we getting? What are we having? Financial consultancy to W. Financial consultancy to W. Financial consultancy to W. Somebody to give it again to me. That figure, give it again to me. The figure, what is the figure? What is the figure? Somebody just to give it again. 165,517. 165,517. 165,517. 165,517. So look up. Look up. Is there any item that we need to adjust with the output? Is there any item that we need to adjust with the output? Budget. Budget. But look up. Look up. There are two approaches to it together, and those two approaches will still work. So when you see, for example, the two approaches, some people will get what's called the output VAT and what? And get the input VAT less than get payable or refundable is when they less the V budget. It still be the same. It still work out together. It will still work out together. So I'm saying the scenarios, for example, some people will not adjust the budgets here, but they'll get the VAT payable or refundable is when they less the bad debts. That will still work. Tuko pamoja. That will still work. It will still give us the same thing. I know initially some people would complain and make a big deal out of it and say that bad debt should come because it's coming later. You get the VAT payable or refundable is when you less it. But even if you adjust it here or you get the output, you less from input, then you less the bad debt will still work. So we can adjust it here if you agree on that. So we have the bad debt. So get for me 60%. It was 60% of 1440. Give me the 60% of 1440. What about the audit of XL? So audit of XL, the tax point was October, and the question requires the VAT for November. The Pora tuko pamoja. XL is the tax point is October. Which one happens first? Service provision. Service provision was in October, basically implying that the tax point is October. Sawa sawa. So then get for me the 60% because you're adjusting. The 60% is what was not paid. So what is the 60%? 864. So we have it as 864. There's 16 over 116, then you less for me that. 16 over 116, then you less for me that. So adjust that for me. 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 So that should be 119, 172. 119, 172. So get for me total output VAT. Total output VAT. So get for me the total output VAT. Total output VAT. So get for me what's called the total output VAT. So we have it as 473, 931. 473, 931. Is that correct? Then you can get the input VAT if that figure is correct. Input V VAT. Input VAT. So we have what we call the item, so call supply. We have the amount. We have the amount. We have the VAT rate. Then we have the VAT. Then you have the VAT. So give me a yes if we are together. Give me a yes if we are together. So we move to the output. So the first one is basically, the first one was we have the legal fees. So what is the figure for the legal fees? Legal fees. Give me the legal fees. Legal fees is, what is the legal fee? So what is the legal fee? The figure for the legal fee. Good people? So what is the figure for the legal fee? So legal fee, is it 360? Is it 360? Yes, get for me the VAT on that. Get for me the VAT on that. So what is the VAT on that? What is the VAT on that? The VAT on that. So good people, what is the VAT on that? So that is 49,655. 49,655. 49,655. So the next one should be what you call electricity. Electricity. Based on our adjustments on electricity. Based on our adjustments. VAT. Which figure goes VAT? VAT. VAT. So that was 150. So 150. 16 over 116. So get for me that 16 over 116. Get for me that. What is the VAT on electricity? So that should be 2690. 2690. 2690. 2690. So then we have what we call the next, we call it computer purchased. So say well consumed by partner, that was private. Computer purchase. Computers. We had a figure of 240. 16 over 116. So what is a computer? So you have it as 33, 33, 103, 33, 103, 33, 103, 33, 103, 33, 103. So then we say that Zawadi, as she paid rent for the month of November, amounting. So we have the rent, 180, we have 16 over 116. 180, we have 16 over. So that should be 24, 8, 28. 24, 8, 28. So what do we have? Is there any item that I've left? Total input VAT. Total input VAT. Total input VAT. So give me the total input VAT. So 128 276. Somebody to confirm what Samiki's as 128 to 76. 128, 128 to 76 to 76. Respond with yes. 128 to 76. So get the VAT payable or refundable. So VAT payable, VAT payable, so what they call refundable. So that is output VAT minus what we call the input VAT. So what is the output VAT? We have that as 473, 931 minus 128 to 76. So get for me that. So what are we getting? Samikis gets for me 345, 655. 345, 345, 655. 345, 655. 345, 655. So that question is done. That question is done. Is that question perfectly done? If that question is at home, you respond with a yes. If that question is, are we together? That question. Then the second part of it, that theory, it talks about the Zawadi Associate is planning to engage the financial management consultants from South Africa to facilitate online training on financial management. Advise Associate on tax point in respect to such services. So we talked about the tax point. Did you discuss the tax point? And been able to talk about what in relation to tax point? How would you advise them? So say it's the earlier of, when service is formed, payment is paid partly or only, or invoice is received. Invoice is received, services, whichever happens first, that basically becomes the tax point. That is basically the explanation on that. Together, we respond to this before we move to the next question. Before we move to the next question, we respond with a yes. Before we move to the next question, is that question on the tax point? If you're to advise, that should be at home. Are we together? No, we are not saying importing services. You've been asked. Let me open that question again. So this is basically Zawadi Limited is planning to engage a financial management consultant from South Africa so I'm saying, look up, Zawadi Limited, we're being told that Zawadi Limited is planning to engage a firm of financial management consultants from South Africa to facilitate training on financial management assignment. Advise Zawadi on tax point in respect to such services. Yes, that is more of input. Yes, that is more of input. That is more of input. But now the concept is the same, is more of importing those services. Do you think for import, what do you say about import? Imports are normally? Wait. Somebody say exempt. Imports. When you carry out an import, what do you do to an import? Team, we don't forget. They're normally exclusive of VAT, not exempted, but exclusive of VAT. But we must all agree, yes, we must all agree as a team that the concept of the tax point is the same, even on application of the import. Is it the same? The concept of the tax point. Is it the same? As the Porter, we agree that the concept of the tax point is basically the same. Zipporah, if you're together, you give Mwalimu a yes on that. Yes. If you're together on that, we respond with yes. Allow me to pick the next question. Allow me to pick on the next. Yes, perfect. So I want us to pick, that is August 2025. Turn to August 2025 question. August 2025 question. August 2025 question. August 2025 question. That was a very interesting question. August 2025 question. August 2025 question. So that is question 1B. Question 1B. Look at that question. It was a very good question. A very interesting question. A very, very interesting question. Together. So are we on it? Are we on it? Thank you. We can do this question before we step for break. Can we do this question before we step for break? Yes. So we are being told that Barani Enterprise, we're being told that Barani Enterprise is the value-added tax, that is VAT registered business, involved in the sale and distribution of both taxable and exempt supply. For both taxable and exempt supplies. For both taxable and exempt supplies. So the following transactions are recorded in the books of the company. The following transactions are basically recorded in the books of the company. So the following transactions are basically recorded in the books of the company. And say for the month of April 2025. For the month of April 2025. So one, sales at standard rate, that is a figure of 1,160,000. What is that? 160,000. What is that? That's an out. Then we say sales made as exempt supplies, 400,000. So the sales made, we call it sales made as exempt, that is output but now exempted. So then we talk about what's called purchase of stationery on credit, purchase of goods for resales on credit, 580. Purchase of goods for resale, that is 520. What is that? What is that? Purchase of goods for resale on credit. So that's an input VAT. Then we have the next, purchase of stationery on credit. That is 116. Purchase of stationery on credit, 116. So somebody asked a question, does credit affect her? Somebody is asking for something, does credit? So let me see what Samik is. Will the credit terms affect? No. Credit will not affect. Even credit, we claim on that together. So then we have the next. We have what we call purchase of fuel for a company car. Purchase of fuel for a company car. Purchase of fuel for a company car. So how would you treat it? But I want us to turn that, are we together? Question and number, are we together? I want us to, on that article, there was something on that article. I want to correct it so that it makes more sense. Say that purchase of, don't say company car, of saloon cars. Well, saloon cars. Well, are we together? Purchase of saloon car. To make it more interesting, purchase of saloon cars. I've fixed something on that. Purchase of saloon cars. Well, are we together? Purchase of saloon cars. Well, together. Purchase of saloon car. I've said I want to bring something very interesting on that. Are we together? So that the information makes it more. Yes. Purchase of saloon cars. Wait first. I've not said no VAT. I've just said purchase of saloon car. I have not said, have I said no VAT on it? Have I said that? I have not. I've just said purchase of saloon cars. Well, is that okay? So don't say no VAT or any. I've not said that. Is that noted? Please, we respond with a yes if that information is clear. I hope I'm clear. I've not said no VAT. I've not said anything. I've just said purchase of saloon car. Well, then we have what's called payment of entertainment expense for client. That is 58. We have it as 58. Payment of entertainment expense for client. Payment of entertainment expense for the client. That is 58. So entertainment. VAT Act for 2013. Entertainment, accommodation, catering. How do you treat them? VAT Act 2013. Entertainment. How would we? That should be exempted. Together, team, that should be exempted. Are we together? That should be exempted. Perfect. So then look up next. Purchase of saloon car for director. Purchase for saloon car for directors. 1,160,000. 1,160,000. How would you treat that? 1,160,000. So, director, is that a business expense? Is that a business expense or a private expense? That's a private expense. Now tie it to the saloon car fuel. So if you tie it to a saloon car fuel, what does now the saloon car fuel basically means? Saloon car fuel. Saloon car fuel. Saloon car fuel. So it becomes also a private expense altogether. Are we together? So it's also exempted from VAT because that also becomes a private expense together. Give it a yes if you're together. Give it a yes if we are together. Are we together? Sometimes those who set exams, Now I've said I have changed it. Yes, I have changed it based on, you see, when sometimes I change a question, it is based on something that was examiner did not do. So when markers are marking those papers, they're corrected together. They're basically corrected together. You see, sometimes we say that sometimes. Are we together? Mercy. Sometimes when I change questions, I just bring another notion, maybe something that you did not see as you. Are we together? Mercy, are you together with me? That is what I'm saying. Are we together? Yes. So the fuel, it becomes non-deductible, restricted or non-deductible. The word is non-deductible. The word should be non-deductible input VAT. That is the correct one. The non-deductible input VAT. Together, Sami kids. The word is non-deductible input VAT. The word is non-deductible input or restricted amounts, particular. Non-deductible input VAT or the restricted amount. Is that not the Zipporah? Give me yes, Zipporah, if you're together. Yes, that becomes the correct one for it. So then we proceed to the next. We have been told that imported raw materials with custom and VAT paid imported raw materials with customs and the VAT paid. What is the VAT paid? And the VAT paid, look at that, and the VAT paid was shillings 230. We have it as 230, and the VAT paid was 232,000. Imported raw materials with custom and VAT paid was basically, we have it as, and the VAT paid is 232. Then you have the next thing called repair. Repairs, we have it as a repair. We have it as repair. To deliver a truck, to deliver a trucks, used exclusively for distribution. Delivery trucks used exclusively for distribution. That is 58,000. Then we have what's called purchase of goods. Look at this, purchase of goods. Purchase of goods. So we call it purchase of goods. Used in both, look up, used in both exempt and taxable supplies. The figure is 348. What do you think about that? I'm very much interested on that. Used for exempt, and what's called taxable supplies. That's a very interesting one. Exempt and taxable supplies. Exempt and taxable supplies. So we say that used for what they call, used for goods purchased, we say for both taxables and exempt supply, 348. How would you deal with this? So on this figure, what should you do with that figure? If we talk about that figure, there should be apportionment. That should basically carry apportionment. We call it apportionment. So that figure should basically be apportionment. So rent for business premise, rent for business premise to a landlord registered for VAT, shillings 116. Shillings 116. Oh no, all amount for both. Yes, we are supposed to apportion, because on that amount we're saying that both exempt and taxable supply. Are we together? What should we allow? We should allow for the taxable supply. Are we together? Yes. So we've entered that rent for business premise to a landlord registered for VAT, shillings 160. So what is that for that rent as the last information? For the last information for that. So that's an input. I want us to read additional information and be very keen on those additional information as I read those additional information. Kindly, I want us to be very keen. So the first additional information, so it means that company uses turnover-based apportionment on the mixed item. So it uses what? Turnover. Do we understand that? A company uses what we call turnover-based apportionment for the input VAT on the mixed. Are we together? So what are we going to say? We are basically saying the turnover that is taxable supplies over total supplies times the VAT on mixed apportionment. When it comes to that, on the mixed apportionment. Together, team, on the mixed apportionment. That is what we call turnover apportionment. Together. Perfect. So then lastly, we have what we call transactions are inclusive of value-added tax, at the rate of 16%. At the rate of 16%, we say at the rate of 16% where applicable. So when you talk transactions are inclusive of VAT at the rate of 16%, what do we use? We use 16 over 116. I want us to do one at least. Before I give you a breather, let's do one, the first part of it. Allow me to do the first one is when I give you a small breather. Allow me to do the first one, then I give you a breather. So number one required, compute what's called output, VAT for the month of April. So just do output. One is output, VAT for what I call for the month of what I call of April. Output VAT. Is there anything tricky on that number one? So for the formula, we say taxable supplies. What is taxable supply? This is standard rate plus what? Plus zero rate. But when it comes to total supplies would now be standard plus zero plus exempt. Kindly give me a yes if we are together. Plus exempt. So further, give me a yes. Perfect. So is there anything tricky on the output VAT? Is there anything tricky on the output VAT? VAT on the mixed supplies. So mixed apportionment, look at the mixed apportionment is additional information, number 25, additional April 2025. So that is mixed apportionment. Together. Thank you, Harriet. Somebody else? Are we seeing additional information number 25, April 2025? Perfect, if we are together. And we're getting ready for exam. We shouldn't panic. We are getting ready. I want us to do this is when I give you a small break. So look up the first one. On the output VAT, is there anything tricky there? Is there anything tricky on that? And you're given 2 marks. The examiner compute what's called output VAT. Is there anything tricky? Nothing tricky. If we do it very fast. So this is item. So what we call supply. We have amount. We have the VAT rate. Then you have what's called the VAT. So the cells we have standard rate cells. Standard rate cells. What is the figure for the standard rate cells? So the figure for the standard rate cells. Give me the figure for the standard rate. What is the figure? Samikis. I want the figure. The figure is not 160. The figure for the standard rate cells, that is 1,160,000. 1,160,000. What is the rate that we're using based on this question? Are we using 16 over 100 or 16 over 116? What are we using? 16 over 116. So what do we get? 16 over 116. What do you have? 16 over 116. So that should be 160. So another cells. Do you have zero rated? Any zero rated in this question? Is there any zero rated in this question? For this particular question, do you have zero rated? We don't have, but we have exempt. Exempt supplies, we just say exempt supply. What is the figure for the exempt supply? The figure is it 400,000? So we have a dash and a dash. So what is the total output VAT? Total output VAT. What is the total output VAT? Give me the total output VAT. So the total output VAT is 1. That gives us 160. Together, that gives us a figure of 160. Are we together? So with that, the end point is this and this. So if you do that, you have your 2 marks. Is that 2 marks a walkover? That 2 marks, is it a walkover? So take a breather, we come back. I want us to take a breather, and we come back. Take a breather, then we come back. Oh, everybody's in. So we get to the second part. Together, we get to the second part. we get to the second part. So we're being told that determine total input VAT incurred and identify which amounts are restricted under VAT Act of 20 we have it of 20 of 2013. So we get the total input and get the ones that are restricted, amounts that are basically restricted. Total input, and we get input and we get amounts that are restricted. So we have items, to what we call supplies, supply, we have amount, we have the VAT rate, and then we have the VAT, and then we have the VAT, and then we have what we call the VAT together team, and then we have the VAT. So our focus is on the input now, total input. From there, we shall be able to identify. First of all, we get the total input together team. First of all, we get the total input. We respond to the yes. So purchase of goods for resale. Purchase of goods for resale. So we have purchase of what we call of goods for resale. So purchase of goods for resale. The figure is that is 580. What is the VAT rate? 580. VAT rate. What are we using as our VAT rate? 16 over 116. So we have 16 over 116. So get for me that. Get for me that. So get for me that. So that should be 80. So 80. So you have stationaries. So what is the figure for the stationery? So that should be 116. So what do you have? 16 over 116. Give me that for the stationery. Somebody says 16? 16K. Somebody gives it a 16K. So saloon ka fuel. Well, we had it as 80. 87 times 16. Get it? What does it give us? We get first of all, and we note that is what is the figure? Just so 12K. So 12K, just note it here. Restricted. This is one of the restricted. This is based on VAT Act, non-deductible or restricted. So then we have the next entertainment. Entertainment. So the figure is 58, 16 over 116. Get for me that. And so that is 8K. So again, we need to note that this. I hope you understand what the question is saying. I hope we are together. Restricted. 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 Then you have saloon car purchase. Purchase of saloon car for director. Saloon car for directors. For directors. So what is the figure we are having for that? So what should be that? So 160. But you also notice this is non-deductible or restricted. This is another example. So that is restricted. So we proceed to the next. We have imported raw materials. Imported raw materials. So what are we going to use? Are we still going to use 16 over Are we still going to use 16 imported raw materials? That should be 16 over 100. So get for me, what do you have 16 over 100? 16 over 100. We just do away with this line. 16 over 100. So get me that 16 over 100. 16 over 100. So that should be 37 120.
Wasn't the 232,000? It's Harriet. I'm asking, wasn't the 232,000 equivalent to 16 over 100?
Yes, so that's 16 over 100 because that's input.
No, it said that the VAT paid was 232,000, right?
I think that was also one of the one of the mistakes. It appears like that, but remember the VAT is not there on that. So just clarify that as clarity on that. The 232 is without VAT. I think the way the examiner sets it, that was the issue. So just note that those figures, those are not VAT. Is that okay? Instruction on it. Are we together?
Yes, we are. Thank you.
Yes. So are we together? Zipporah. There's something on Zipporah. Zipporah. Are you answered, Zipporah? Respond with a yes if you're together. Zipporah, are we together? Zipporah, are we together? Perfect if you're together. We don't want to leave any person behind. So then we come to the next, we have what's called, we have this, we have this, we have, so we have the next, we have repairs. Repairs, that should be 58. 58, repairs 58, 16 over 116. 16 over 116. We're saying, based on VAT, Florentina, based on VAT Act 2013, we talked about restricted on the non-deductible input VAT. These are purchases that we cannot claim input VAT on. A given example was on catering, entertainment, accommodation, and the private expenses. That is what you call the restricted or the non-deductible input VAT. Together, Florentina. Yes, so that's 8,000. So you can check on the VAT Act of 2013. You can look at that, the VAT Act of 2013. So we have the next, rent for business. Rent for business. So rent for business, what is the figure? I'm repeating. Get for me that, then I repeat. Rent. Get for me for the rent. So for the rent, it's 16. So when you talk about restricted, based on the VAT Act of 2013, are we together? Based on the VAT Act of 2013, we're saying that they are expenses that we cannot offset against the output VAT, and we call them the non-deductible input VAT. A given example, we talked about catering, accommodation. We have accommodation, entertainment, and then we have the private expenses. That is explanation. Joy, are we together? Joy, if you're together, we respond with a yes. Joy, are we together? Thank you so much if we're together. So then we have the option, but remember, I've not put the lookup because that basically we need to apportion altogether. That has to be apportioned. So the question is, lookup team. Now I tell you why this question. Yes, section 17. So look at this. Look at why this question is such a simple, but then look at it, 3 marks. Are you seeing this? 3 marks. Are you seeing this? So the question, determine the total input. I know some people are wondering if they want determine what you call the total input in card and identify which amounts are restricted under the VAT Act altogether. So the question, total input, that's why we did this. Then from that, we can basically now get the restricted. Ariet Manipata, Mercy, are we together? Mercy and Ariet, are we together? Naomi, are you there? I hope Naomi is there. Sammy Keys, are you there? Just a minute. Somebody says gross. Now I'm saying, Jacinta, if you look at that figure 232, I'm just saying that the person who tested it, that figure should be without VAT, because if you calculate the VAT, then what is the essence? What is the student going to do? I think it appears like the VAT is already there. But I'm saying, treat it as a figure without. That is not VAT, but that is a gross figure, not VAT. Are we together? VAT is not charged. Jacinta, give me a yes if you're together. That is what I've said. Jacinta. So, and then we say that for import we say that normally exclusive of VAT. Jacinta, I want us to be together. Jacinta, are we together? You're the one we're waiting for. You are the one we are waiting for. Jacinta, are we together? Jacinta, you're the one we're waiting for. If you're together, you give Mwalimu a yes. So we're just saying, you see, for imports are normally exclusive of VAT. So VAT is not on that figure. Are we together? That's why we're using 16 over 100. I want you to respond, Jacinta. If there's anything that needs clarification so that we move away from there. Jacinta, you are the one we are waiting for. Kindly assist us to assist you. Kindly assist us to assist you. Kindly assist us to assist you. Is Jacinta there? She's not in. Okay, that's okay. That's okay. That's okay then. So we had the mixed. We had the mixed. She has asked and left. We are very sorry. Then we have purchase of goods. We had the purchase of what we call goods. This is the mixed. So mixed was basically 348. So we have 16 over 116. So what is that figure? But we need to know that this should be apportioned. So get for me that. So get for me that mixed. That should be 48. So that should basically be apportioned. So the essence of this, why have I done the whole thing? Why have I done the whole thing? Because the examiner says, determine the total input VAT. I know guys were wondering, determine the total output VAT. So we give everything away together. That's why we've gotten that. Is that understood, Zipporah? So now we get to the other part and tell us which amounts are restricted under. Which amounts are restricted? Amounts restricted. So now we go to amounts restricted. So we go to the amounts. We call it amounts restricted. Restricted. So the amounts restricted, we have saloon car fuel. Amount restricted is 12 that. Then we have entertainment. Entertainment is 8. Then we have what they call purchase. Saloon car for directors, saloon car for what they call for the directors. So what is that figure purchase for saloon car for the director? So what is 160? So what is the amount restricted? Get for me the amount restricted. Get for me the amount restricted. What is the total amount that is restricted? The total amount that is basically restricted. The total amount that you say is restricted. Look up, team. I want us to get back there. So look up, team. Get back there. Are we together? Sonic is